Lincoln is really a baby question, so there's not a lot that's interesting in the question, but there is something that I want you to specifically look at, and that's the catch in the question. And that catch is in the PPE calculations. So please have a look. If you do not do anything else about this question, that's fine because we've done a lot of these kind of exercises already. But have a look at the catch, which is in the PPE of machinery. Okay, they give you the financial statements. They give you assets, property, plant and equipment, and investments. Look out for that one. Stock, trade and other receivables. Equity consists out of ordinary share capital, revaluation reserve. Obviously, you know it has an impact on your land and buildings. Accumulated profits, then bank overdraft, current portion of bank loan. By now you must know that you have to add that current portion with a long-term loan to get the total balance, and that one and the 5,000 to get the opening balance. Closing balance, the long-term and the short-term, opening balance, the long-term and the short-term. Receive of revenue and trade and other payables. Then they also give you the income statement, gross profit. They started gross profit again. Operating profit, other income, interest expense, dividend income, profit before tax, income tax, and profit after tax. Ordinary dividends of 28,200 were paid. Cash paid to suppliers and employees was 245050. The gross profit percentage is 55%. Depreciation for the year was included in determining the operating profit at the following amounts. 20,000 for machinery, and this is depreciation. Right? It was 20,000 rand for machinery, and buildings was 1050, so the write-off depreciation on the buildings. Included in other income is profit on the sale of machinery and profit on the sale of land with a carrying value of which 35,000 was received. Guys, it cannot be more clear. So how much was the proceeds? 35,000. How much was the profit? 15,000. Land and buildings were revalued on 1 January during 2008. Machinery with a cost price of 10,000 rand was sold for 8,950 rand. So they give you the proceeds and not replaced. On 31 December, new machinery was purchased to expand operations. So they tell you that whatever the balancing figure is must be for expansion purposes. Then they give you the breakdown of property, plant and equipment, and they ask from you the statement of cash flow, but based on the indirect method. Now they give you a lot of information here that actually relates to the direct method. Cash paid to suppliers and employees. Well, you can use that to check whether you're right, but it's not necessary because it is the indirect method that they ask. They give you the gross profit percentage. I'm going to need that if I want to work out sales, but I'm only going to work out sales or revenue when I work with a direct method. So that is also not needed in this question. So where does the indirect method start? The indirect method starts with my profit before tax, and I have that figure in my income statement. Yeah, profit before tax, 120,000 rand. Now let's do the PPE accounts, please. So we're going to open up, let's start with land and buildings. The cost price account, debit balance 55,000, on the credit side closing balance 85,000. So here's land and buildings, 50,000, closing balance 85,000. They told us that there was a revaluation during the year. Revaluation reserve. There was nothing in the past. Now there's 35,000 rand. So obviously the revaluation 35,000 rand. Now the way that I have done this calculation was to put the accumulated depreciation for the land in this one combined account as well. So the opening balance of accumulated depreciation was 1,500 and the closing balance of accumulated depreciation was 2,250. What else do they tell us about buildings? They say that there was depreciation for the year of 1,050. So depreciation for the year of 1,050. Profit on the sale of the land with a carrying value of 20,000 Rand. Now guys, that is why I had to put everything in one account, because they do not give me the split between the cost price, which I can take out of the cost price account, and the accumulated depreciation that I can take out of the accumulated depreciation account. They only give me the carrying value. So therefore, I cannot split the two accounts. I have to work with a combined account in order to take out the carrying value of that items which was sold, the land and buildings which was sold, 20,000 Rand. Because what do I usually do? I take out the cost price on the debit side of the cost price, on the credit side of the cost price account, and the accumulated depreciation I take out on the debit side. So what do I take out in effect? I take out the carrying value of that asset which is being sold. So this 20,000 Rand is the net impact of that transaction. If I do a combined account, then I have, if I'm going to take out the carry value, in effect eliminated the cost price as well as the accumulated depreciation. We've already seen there that if that was a 20,000 and 35,000 was received, there was then a profit there of 15,000 Rand. So you can write it for yourself, but I think they also give that to you, profit of 15,000 Rand. Great, so the 35,000 you can straight away go and park that in your investment activities. Where is that? Here, proceeds from the sale of land, 35,000 Rand. Great, and then when we now balance off the land and buildings account, now we're able to determine as one balancing figure what was the new land and buildings acquired, and that was 20,000. So purchase of land, 20,000 Rand of land and buildings. Now I don't think they told you here which was the machinery was for expansion purposes. I think we can put this down for replacement purposes purely because I have actually had some land and buildings before which I have replaced now. Purchase of land, replacement. Okay. Great. 20,000 Rand. Now the machinery account is exactly the same. Here they tell us during the year, machinery with a cost price of 10,000 Rand was sold for 8,950. Well, let's put the 8,950 and get your half mark there. Proceeds from the sale of machinery, 8,950. But they tell us it was sold and not replaced, and then there was new machinery purchased. They don't tell me what is the accumulated depreciation on that machinery which was sold. They told me there I made a profit on the sale of the machinery of 5,000 Rand though. So let's do this calculation because here we also have to work with a combined account. So again, opening balance 150 and 215,000. Opening balance 150,000, closing balance 215,000. Accumulated depreciation, opening balance 48,500. There's the opening balance, and there's our closing balance of 62,450. So, ladies and gentlemen, what we do is we do exactly what we should have done or would have done in a cost price account and in an accumulated depreciation account. The only difference is we do everything now in a combined account. Okay, but what we do is exactly the same. We don't do it in two separate accounts, we only do it now in one account, but we do exactly the same. Now, they tell us that that machinery was actually sold for 8,950. So in our asset disposal account, we have received 8,950 Rand for that machine. They told us that the cost price was 10,000 Rand. So we can take out the 10,000 Rand, but we must remember that there is still accumulated depreciation. They also tell us that there was a profit on the sale of the machine of 5,000 Rand. So therefore we can account for that, a profit on the sale of 5,000 Rand. So what is now our balancing figure in the asset disposal account? Our accumulated depreciation on the asset that was sold. So once we have that figure, we can now actually put that in our combined account, 6050. If we took out the cost, now we have to take out the accumulated depreciation. Now we have posted everything in this combined account, and now the balancing figure is going to be the new machinery which we have acquired for, and I think they said it was for expansion purposes. So the 75,000 Rand, that is going to be a cash outflow then under investing activities, new machinery for expansion purposes, 75,000 Rand. The proceeds, we have already parked the proceeds. The 20,000, we have already done that 20,000. 35,000 was the proceeds, we've already parked that. The only thing under investing activities is now our investments. And there was an increase in investments of 13,000 Rand, increase in investments. So therefore we can actually work out what is the total cash flow out of investing activities. That is done and dusted. Okay. Just want to do that. So now let's go back to our indirect method. We're going to start with cash profit before tax. We have our profit before tax. It's going to be 120,000. Then we are going to adjust it, number one, for non-cash flow items, of which the first one being depreciation. Depreciation for the year was included machinery 20,000 and buildings 1050. So total depreciation then 21,050. Profit on the sale of the machines, we've just worked with that one, that was 5,000. Profit on the sale of land, 15,000. So we've worked with those two, 5,000, 15,000. Items that we're going to disclose separately. Dividends received. Let's have a look where that is. Dividend income, 3,000 Rand, and interest expense, 900 Rand. So dividends received, we have that increased profit before tax. So if we want to eliminate that, we're going to subtract that from profit before tax. Interest paid, that reduced profit before tax. So if we want to eliminate that, we have to increase profit before tax. And now our changes in working capital. Remember, this is now the whole caboot. So it's just straightforward. It is the changes that happened in stock. There was an increase in inventory. There was a decrease in trade and other receivables. And then there was also an increase in trade and other payables. So therefore 20,000 was an increase in inventory. If that means those brackets, that means that was an increase. If it was a decrease, it would have been out of brackets. That is what that means. 20,000. There was also an a decrease in debtors of 7,000. And then there was an increase in creditors of 6,000. And that then gives us total cash generated by operations of 111,950. Great. We're now going to show the separately disclosable items. Dividends received, that was a 3,000. Interest paid, which was the 900. Dividends paid. I think the question gave you the amount for dividends paid for the year. They told you somewhere ordinary dividends of 28,200 was paid during the year. So all you're going to put is put it in here. Interest we've already spoken about, and then tax paid. Here's our SARS account, which you're going to do. You're going to say, okay, what was my opening balance of SARS in my statement of changes in equity? Opening balance 5,000, closing balance 6,000, and our expense item for the year was 46,800. Opening balance, closing balance, expense item, so that means we've actually paid the receiver of revenue 45,800. Then we can actually do this calculation and we see that the total cash flow from operating activities was 40,015. Investment activities we've already done. All we have to do is we have to add this all up, and that then will give us that amount of movement of investment activities, 64,050. And now the last one is our cash flow from financing activities. That was quite straightforward. You're just going to have a look what is the difference in ordinary share capital. There was an increase of ordinary shares during the year, equal 21,000 Rand, issue of shares. And then the bank loan. The bank loan, you had to add opening balance 48,000 plus 5,000 gives me 53, no, not 5,000, sorry, plus 14,000. 48,000 plus 14,000 less 17,000 plus 7,000. 48 plus 14 less 17 plus 7, and that then means that we've repaid some of the loan during the year of 38,000. Net cash outflow from financing activities 17,000. Cash and cash equivalents in the beginning of the year was equal to 20,000 positive. At the end of the year, we had an overdrawn balance of 21,000, so there was a negative movement of 41,000 in cash and cash equivalents. And that's it. So it's really an easy question. The only thing that you have to take note of, have a look at these calculations because that is really, really important.